Volkswagen, the car company behind Porsche, Audi, and Lamborghini, is right now trading at a laughable $10 per share with a price to earnings ratio under 7 but a solid dividend. To me that sounds like the ultimate bargain, right? But here's the catch. 2025 was brutal. Profits got crushed by over 50%. The US sales have dropped 13% and the EV competition is heating up and their biggest comeback project just got delayed for years. So is this one of the biggest value opportunities in the market right now? Or is it a legacy giant slowly falling behind? Let's break it down. Now, full disclaimer, I'm not a financial expert. I'm not telling you guys to buy or sell the stock. I'm just putting out some information, so please do your own research. Now, on the surface, this actually seems like a pretty interesting setup. You've got one of the biggest car companies in the world trading at a really low price, paying a solid dividend, and still selling millions of vehicles per year. So naturally, you might be thinking, what am I missing here? Because stocks like these don't usually stay this cheap for no reason. And once you start digging into what's been happening behind the scenes, the profits, the EV transition, the competition, things start to get a lot more complicated. So let's break down what Volkswagen actually is today and where this whole story could go from here. So at its core, this is one of the largest automotive companies in the world. We're talking about a massive global operation with over 10 million vehicles sold annually across a portfolio of brands that covers everything from affordable cars to ultra luxury. You've got your everyday vehicles under Volkswagen, then brands like Audi and Porsche, and even high-end names like Lamborghini and Bentley. So this isn't just a car company, it's an entire automotive empire. Now for quick context, the company was originally founded in 1937 in Germany with the goal of creating a people's car. That history is tied to the Nazi era, which is obviously controversial, but after World War II, the company was rebuilt and eventually turned into one of the most recognizable automotive brands in the world. Fast forward to today, and the business has evolved way beyond just manufacturing cars. They make money selling vehicles globally, financing and leasing through their financial services division, and increasingly investing in electric vehicles and software. And that last part is where things get really important. Volkswagen is in the middle of a massive transition from traditional gas-powered vehicles to electric vehicles and software-driven platforms. In 2025 alone, they delivered close to 1 million electric vehicles, which is a huge jump year over year. Europe has been a strong market for them, and they're pushing hard into China with new partnerships. They're also teaming up with companies like Rivian to improve the software and vehicle architecture, which is something they historically struggled with. But while all of this sounds promising, it's not all smooth. In the US, for example, sales actually dropped around 13% in 2025. They're still a relatively small player here with only about 1 to 2% of the market share. They're trying to fix that with SUVs and refreshed models, but realistically, the US isn't their main focus. Europe and China are. And on top of that, the shift to electric vehicles is expensive. You've got high development costs, delays in key projects, and increasing competition, especially from newer electric vehicle companies and Chinese manufacturers. So when you take a step back, you've got a company that's global, that's massive, and still evolving, but also one that's dealing with a lot of pressure as it tries to reinvent itself for the future. Alright, so here's how I see it. The stock is one of those situations where it looks cheap, but you have to ask yourself, why is it cheap? On paper, yeah, you've got a low price compared to earnings, a solid dividend, and a massive global brand behind it. That's usually the kind of setup value investors love, but the market isn't stupid. If this thing was truly a no-brainer, it wouldn't be sitting around $10. So to me, this is pretty tough to say. I don't know where the stock is headed, to be honest. The way I see it, it comes down to two scenarios. The bull case is that Volkswagen actually pulls this off. Their electric vehicles push starts paying off, the Rivian partnership helps fix their software issues, and they stay competitive globally, especially in Europe and China. If that happens, this stock could easily re-rate higher, and you're getting in at what looks like a discount. But then, there's the bear case. The margins are getting squeezed, competition is getting tougher, and they're spending billions trying to reinvent themselves. If this execution slips, especially with the electric vehicle vehicles and the software, this could just stay stuck, or honestly, it can drift a lot lower over time. And honestly, I kind of see this as a slow grind type of stock. I don't think Volkswagen will go bankrupt anytime soon because it's too big and too global, but I also don't see some explosive upside where this can suddenly take off. So for me, this isn't a golden opportunity type of investment. It's more like if you want something cheap with a dividend and you're okay with being patient, I'd say, yeah, sure, go for it. Buy into it. It's pretty cheap. It's only $10. But if you're looking for strong growth or momentum, there's probably better opportunities out there for you. So when you take a step back and look at everything, this really comes down to how you personally see the future of this company. You've got a global giant that's trying to reinvent itself, but it's happening in one of the most competitive and expensive transitions we've ever seen in the auto industry. Maybe they pull it off and this ends up being one of those overlooked value plays, or maybe they don't and the stock just stays stuck while other companies move ahead. That's really the bet you're making here. But I want to know what you guys think. Would you buy Volkswagen at these low levels, hold it for the dividend, or are you going to just stay away completely? Drop your thoughts down in the comments because I do read all of them, and if you're looking to start investing and build out your portfolio, I've got some links down below that can help you. If you sign up for Robinhood using my link, you can get a free stock that's worth between $5 to $200 just for getting started, so you don't have to put any money down. All you got to do is just sign up, put your info in, and you get a free stock. And if you use my Coinbase link, you'll get $10 in free Bitcoin after your first trade of $5 or more, and it also helps support the channel. And with that being said, if you got value out of this and you want more real no hype breakdowns like this, hit the like button, subscribe, and I'll catch you guys in the next one.